Welcome to the indices, and here we're looking at the S&P 500, and we've had that sharp move down, which obviously gives us a bit of a bearish picture there. And the way that we need to look at this is twofold now. One, firstly, is the five-wave structure up from this particular low through here, and because it never made a new high from here, we could call this wave 1 up here, and we're looking back for wave 2 here, and this would have to be the A wave, the B wave, and the C wave in 5 waves. You know, the cash market so far down through here, it's only 3 waves down, but it's likely to make 5 waves, so that would leave the cash market at least down at 1860 area here, but the futures market 50-60% retracement level is a bit down a bit further at 1850. So that's what we can expect. We can expect some more weakness to fold through here. But what also concerns me as well in the bigger picture is the larger wave 4 that we've been sort of working with here. Simply because we've never made a new high above here. We know that this is corrective pattern within here, and we know that top will eventually be taken out, but we could certainly have this as the A wave, the B wave up to here, and then the C wave coming down to the 4th wave of 1 lesser degree. So that's also quite viable as well. Yeah, so I don't really know what to sort of say about that. If we'd stayed above 1872, well, then we could have been, working out a little bullish pattern to the upside. But a breaching of that 1872 here really puts it into a downward slide here. So yeah, look, this move down through here is basically 5 waves from that point to that point, that low there, from there to there, and then this is the other 5 waves here. So far we've got 3 there, but it's likely that the cash market will move lower. I mean, it's possible that this is still up for 1 here and back for 2 here. That's still a possibility, but it would have to find support on 1872 right now to do that. And as I mentioned, the cash market appears that it does have further to move down, and that would take that down to 1860 area here, which would take that low out and cancel out that positive count. But look, it's still there, it's possible, but it's likely that we're going to see a bit further more downside through to here. So in those 2 terms of being downside, we would need to look at this having 5 waves down to here, and then we'd need to see that push up in an impulse wave to the upside. So if we see it move up in a corrective manner in terms of an A and a B and a C, then we'll be looking to short that market as such. So in terms of shorting it, if it was going to be the way, it would be 1, 2, 3, 4, and 5 down to here somewhere, and then then an A and a B and a C coming back up to here, and then moving down through there. And this is what we would need to work out. If we've got a 3-wave price action here, and that's confirmed with that move there, then that's what we'd be looking at from that point there. So yeah. So either we get an impulse wave moving straight up through here in 5 waves, or if we just get the 3 waves that I just talked about then coming back, well, probably either this would be the first resistance area here on the way back up, and the second one would be this one here. So it will give us time to look at the at the wave count as such. Alrighty, the DAX is pretty much in the same position as well, in terms that it could turn into a bearish picture, and the DAX and the S&P 500 are quite close to each other. But as it stands, I'm looking at this as, because we were looking at this as not a bad 5-wave structure up through here. So looking for an ABC back, which it is now. So we could put that 2 there, because technically that wave 2 can stay there as long as that low there doesn't get breached. So if that's the case, then we can continue to hold that there, and we've got a trend line there, so we may as well. Yes, and there will be some support there, and yes, it will move up, but it could certainly breach that, and then we'd have a 5-wave structure down. And we could look at that. It's a bit tricky then, because we'd have to look at this down for 1, back for 2 here, 3, 4, and 5, moving further down into its pattern, which would be the D wave down here. So, just sort of recapping this, if we do get support on a nice tested support on 9.5, then we'll be going long from that point there. Must be tested, must have a reference point. So in bigger picture, if this moves up through here, it moves up through here, it will go up and then it will come back down like it's done here, but it must find support, and then you can use this reference point, wherever that may be, the top bit here, to take out the high from. The FTSE is pretty much doing what we expected it to do. As you know, since it's ever arrived here, we've just been waiting for the corrective pattern to run through here. And look, in three waves, so we could look at it as an A and a B and a C here, or we could look at it as an A and a B and a C to here, then up for 1, 2, 3, 4, 5 here, then A and a B and a C back to here, and moving off from there. But either way, it doesn't matter. What we're looking for is we want support on that 6.8, so it's got to move up there, come back and check it, and then that high that it makes, that's your reference point. So you just put an order to go long if that gets pushed through there. So 8's a profit-taking number, so we may see a bigger picture of bearishness occur here if the other markets drop from here. So developing support on that 6.8, it's got to be very clear to you to do that. The Australian market has also taken on a bit of a bearish bias as well. From this low here, 54.24, we've got an impulse wave here, and we've got an impulse wave here. So we've got the possibility for it to move up. But if it takes out this low here, then that little area, that low there, then at 38, then that confirms that all of that pattern that we're looking at here above the 54.24 is corrective, and new lows will be made, and we would have to look down at 5300, I guess, down that way there. So as it stands at the moment, while it's above 54.50, then it's corrective, and this move down through here can be an A wave, a B wave, and a C wave, finishing here and moving up. So like the DAX, like the FTSE, like the S&P 500, we're calling the current lows in as possible lows, but if they get breached, then we've got a bearish pattern. So you know where you are, and you'll need to act accordingly. So acting accordingly here would be long on 54.72 as a tested support, and pretty much you can look at being short from 54.50 as a retested resistance. So it's likely to bounce off the 54.40, go back and retest the 54.50, and then you just need to see it sort of fail at that point and work down. It's not like you're going to have a beautiful trade to the downside, because you'll be trading short into group 1, which is a bit of a no-no really, because it bounces around a lot. So you'd have to keep the stop well away, keep it above the 54.50, either take the money at the 54.10 or 5400 if that's going to be the case, or you simply wait, keep the stop up here. Once the 52.20 becomes a really strong retested resistance, then you can bring the stop down to 54.33 or 54.37, and then look to add, if you're trading the longer term, for the 5400 to be there. But the daily market is moving into the over sold area, so there is reasonable opportunity for the market to push up. It's just that I don't have it's just not a very good impulsive wave to the upside. If it is building to the upside, that'll have to be up for 1, back for 2 of 1 degree, then a smaller degree, up for 1 and back for 2. So the bias at the moment really looks like it's more like a corrective pattern that will unfold further to the downside. So the 54.50 can be a nice little sort of line in the sand for entering in shorts, and you'd have to keep the stop above the 54.72 number at this stage here. If you're short already, then you've got to keep the stop at 54.83 above this little high here, at least, because a breach of that would say it's a change in trend. Alrighty, thanks.